Okay, hello everyone. Welcome to this weekend study session. I'm going to be covering the general market and the individual stocks today. There's not a whole lot to be said on either side of those sessions, so we're going to take a look here. But again, I don't have a whole lot to report that's much different, except that we did go on a sell signal, and this has been just incredible back and forth action. Like I've said before in previous weeks. We haven't seen the risk model get whipped around like this since its inception, and since we've been doing this for Minervini Private Access for the better part of about I guess it's been 11, 12 years now. This has really been just a lot of rotation, back and forth, and just a sideways market where we've seen conditions improve and then they degrade, and then we get setups, and then you get breakouts. You get a couple of days of follow through here and there, and next thing you know, you're getting stops getting clipped. And it's just the same story. We've since the beginning of February, back in or the beginning of February this year, we started with talking about the short-term nature of not having that follow through, institutional selling into retail buying. It's still persisting in some areas. Yes, it's better than others, and we have been able to find a few areas here and there that have had some follow through. But on balance, it's just been very frustrating for anybody who's trying to play for the bigger move yet. And I see no reason to change that approach on the short term side until we see the longer term side start to work. So you see, general market is still positive, which is based on the major averages in price and volume. We're still positive there. However, I just think it's a very poor gauge of the environment. Up down volumes negative. New highs, new lows are neutral with the Nasdaq component. We look at the Nasdaq and the NYSE. The Nasdaq component is decidedly negative, while the New York Stock Exchange component is still holding positive. And again, that's that bifurcation or bifurcated nature of the market, where we've got this market that's been split into so many different ways. If you look at the Nasdaq versus the Dow versus the Russell 2000, stock participation, we saw at positive there for just a brief moment. Now has moved to neutral, and if we get more breakdowns here, we'll go to negative. And that's really what I'm keying in on, is the stock participation, or the action in individual stocks. Since last week, this has not been updated. It's somewhere around the same, though, around 55% up. S&P 500 performance since the buy signal back in April of 2020. So still on that buy signal on a long-term basis, but again, in the intermediate term and the near term, we're definitely very cautious here. Going into this second half of the year, we are going into a seasonally weak period, and I think we've got to be real careful about a market slide here. I don't know if we've already corrected beneath the surface, and this is going to turn out to be a stealth correction, which I'll talk about in just a second, or if we're going to have the indexes and the areas in the market that have held up catch up to the areas that have already been correcting. Time will tell, but what I do know is that either scenario is a tough scenario to get involved with when you're bouncing back and forth between cyclicals and growth, and between various groups, whether it's the stocks doing well in the semiconductors, versus some other groups. In the retail group this last week started picking up here, but who knows how much how much leg that's going to have. We haven't seen any area of the market be able to really hold and sustain any type of move for very long. This is what I keep keying in on, and I'm really keying in on this 200-day moving average. I know we look at the 50-day moving average also, but the percentage of stocks above their 200-day moving average, which is a long-term moving average. You can't be in a stage two uptrend if you're below the 200-day moving average. So we've taken more than 2/3 of the market off of the table for consideration for purchase in the Nasdaq, of course, and with only 37% of Nasdaq stocks above their long-term 200-day moving average. Now, the real problem is, you can see we're very extended from the 200-day moving average here, and usually when we get a scenario where we're extended from the 200-day and we're near new highs, and this is diverging, and you're below 50%. usually it spells correction, and the indexes have to catch up to the stocks. The stocks usually will lead and give you that heads up. This has been a heads up since February. So again, is this big long divergence just shows that we have had less and less and less and less and less participation as we moved higher here and higher, and it's just showing that the market is correcting beneath the surface, at least on the Nasdaq right now. When you look at the advanced decline line of the Nasdaq, and I don't get too caught up in the advanced decline lines, particularly the Nasdaq, I don't get too caught up in because this has lagged before. But you can see it's topped here back in February. Also, this is where it all started. Remember, February is where the market got tough and we went into that short-term trading environment, and it's been whipsaw back and forth. Even though the Nasdaq is higher, you can see a completely inverse picture with the advanced decline line. So again, we've topped on the advanced decline line, and now it's breaking down. It's not only breaking down off the highs here, but now you formed a little ledge and you've broken through support there. So again, when you take a look at the percentage of stocks above the 200-day, you're looking at the advanced decline line breaking down. I mean, it just looks like it's a matter of time before we start coming in here. New York Stock Exchange advanced decline line, we do watch because it peaks before the market. It'll peak ahead of the market. So as long as the advanced decline line hasn't peaked and it's making new highs, you usually have yourself, months of continued support in the market because, like I said, it peaks ahead of time. So it can have a very long lead time, and it only peaked back in looks like around July or so, late June, early July. So again, but it's just another sign that we are seeing breadth is deteriorating. So the other issue here, and that is with the Russell 2000, we have no risk on trade when it comes to the small cap, mid cap area, and this index is also looking like it's starting to break down here. Now, you're still in this sideways, consolidation, and you haven't taken out these lows yet. Maybe this is just a big basing period, and we could come out of this, and we'll get another leg up. It's certainly possible, but right now, we've got the 50-day starting to turn down. We've broken down here, and we're starting to challenge here this support here, and also traded below the 200-day. So we got to see if we hold here, if we start to roll over with the Russell 2000 again. Again, this is a classic risk off and an environment where it's hard penny. Now, I'm keying in on the IBD 50. I'm still watching the IBD 50 for a couple of reasons. One, it represents the type of stocks that we would generally traffic in. And also, you formed a nice base here, and you're basically forming a pivot here. If we could break out of here, that would be great news. I'd love to see us break out of here. And this is only 50 stocks, but they are equally weighted. And I would this would be something that I would like to see, and then I would look at individual names to see if we're getting the setups that are corresponding and corroborating this. Also, the IBD 8585 index is going to have a lot of crossover, but another index that's worth watching. And you can see you're forming this pivot here and forming the right side of this VCP. So, again, if these break down here, if we start breaking down here and you see a big down week on this would be very, along with the other factors, this would sort of be the last straw, I think, when you see this give in. So we're back to the sidelines, essentially. Volatility and rotation is just creating an environment that makes it very hard to get any real gains on the upside, and also a lot of stops getting hit. So what that means is that the reward is not paying for the risk, and that's sort of what you have. That's the thing that you have to assess constantly: is the reward paying for my risk? So now, in my case, I look back, at the beginning of the year here, and I said, you know what, the reward is not paying for my risk. What type of reward am I getting? Okay, so instead of getting 10 or 12%, swing moves on average that I can capture, I'm getting 5 or 6%, let's say. Okay, so instead of my stop being 4, 5, 6% on average, I'm going to have to maybe be 2, 3, 4% on average. I have to make an adjustment for that. So that's what I've done. That's what I suggest that you stay with if it's been working. If not, you stay on the sidelines and wait this out. Open positions are now negative on balance. If you take a look at what we have open, of course, that's diminished dramatically in a short period of time. And if you remember, I said you shouldn't be buying all these stocks, small number. You really got to base your exposure and your ramping up, or your aggressive, your progressive exposure based on what's happening in your own portfolio. What is going on with your own trading? So has your last 4 or 5 trades been profitable? Are you profitable on balance of what you're currently holding? And what is your year like? What is your month like? Are you up? Do you have, some cushion as far as that's concerned? Those are the things that you have to gauge to really decide if you're going to step on the gas, ride the brake, or completely get out. So right now, a lot of stops were hit. Open positions are negative on balance. Like I said, a seasonally weak period we're going into. The question is, are we going to have a correction here? And to me, it doesn't really matter. I mean, I hope we do have a correction. I'd love to see a correction. But to me, all that matters is how my positions are performing and how my buy list is setting up. And if they're working, if the stocks are working from the buy list, that's like 90% of I make all my decision from. Just what's my buy list look like? Are the stocks breaking out, working? Am I getting follow through? I'm just trying to gauge, am I getting violations or confirmations? And I bring those positions, live into my portfolio. And if they're working, great. I start bumping it until I'm really fully invested and aggressive. Or if they're not, I scale back and I wait it out. It's really that straightforward. I don't want to say simple, and I certainly don't want to say easy, but it is a pretty simple, straightforward approach. So let's see what this week brings. And we're getting a little snapback here, and that's normal to get a bounce. But now we got to see what happens after the bounce. If all of a sudden we start rolling over again, that's my guess that we're going to. But again, this has been a tough environment to call, because you really just never get anything in any direction. So if you call, you say we're going down, oh, well, then we go back up, and then we go up, we're going back down. It's back and forth. So it's hard to make a direction call in a directionless market. You can't. There is no direction. So maybe the call is it's still going to stay directionless. I don't know. So, but that's the worst environment. Then you get whipped all around. So all right. So let's take a look at some stocks. There's not a whole lot of stocks here. And certainly for BioAlert, I don't have a bunch. I got a good little handful of names that are high on deck that I could maybe bring onto BioAlert. We'll see how they open on Monday and see what starts to transpire here. But let me look at a few names here. We got the CAL. So in a good market, I'm buying stocks, even though they're below their 50-day and a slightly declining 50-day. I'm buying off the low cheat here. This is a really nice tight little pivot. This is about the lowest that you ever get a chance to buy a stock in a base, is when it performs a low cheat so close to the low here, like this. And again, just to for those of you that don't know, you can buy the low cheats. You can buy as long as the stock is no more than about. I use 10% as my absolute max, but usually it's about 8% that they'll set up within 8% of the 50-day. So if no more than 8 or 10% below the 50-day, you can still play those pivots even though it's below the 50. The thing you got to be careful of is if the 50 is in a really sharp downtrend. If you get yourself in a really sharp downtrend, the 50 is like this, and now it's going to break out right into that you got to be a little more careful, because the downtrend is so strong, you probably won't get much upside progress from the stock until that trend starts to flatten out and turn up. So this CAR, you're forming a nice little right side here. This looks like it may still need some pivot building here, but again, you might get a pullback buy set up here. CCRN, another one, was up 6% on Friday. I like the way you had this big up day here. It came back, and then you got this support, and then came in here. I believe this is. Let me bring some on the screen. I know at least it looks like it's trading thin. What is this? 327,000 shares a day. To me, that's not very thin. I'm okay with that. I mean, I buy stocks sometimes that trade 30,000 shares a day, but I just buy a small amount. But again, this is looking pretty interesting here on this right side. Dillard's DDS, which is also trying to form this right side. I saw there was a bunch of retail stocks setting up. You saw the retail names. This SCVL. I actually was going to buy this SCVL on Friday. It opened up in the morning, and then it pulled back and squatted. And I was going to play the early day reversal and see if I can get a strong close. That's how I normally play those early day reversals. But once the market starts coming under pressure and things aren't working so well, then I start shying away from buying those reversals. But again, this one actually played out perfect. Again, it was, in the morning. Actually, can I bring up? Yeah, if you see right here, this is the 5-minute right here. See, it came up in the morning, moved out, then it squatted in. And then as it started to turn back up, that's where I was looking to buy it. So it would have worked out. But again, this broke out. I'm seeing, another reason why is I'm seeing a bunch of retail names that were doing well. But the problem is that you never, the group activity will be in one area one day, and then you get 2 days and it's in another area, and it completes completely inversely. It'll go from growth to cyclical, not even in different growth groups. So it's been challenging as far as that's concerned. ISEE, this is a wide power play, if you will. So you had what? Take a look here. We measure this. So actually, oh, I'm sorry. I thought it was a little bit more than that. So wait a minute. Maybe we talked about this. Yeah. So it actually doesn't meet the power play. My bad here. This is a stock that's up by 80%. So you really need this to be a double. So this is really just a very powerful stock. And again, it's semantics, but when it comes to power plays, it's more than semantics, because we look back and you really need that double. I like the way this has been so powerful. So it's very strong, but now you've got about a 35% decline, which is in excess of the 20%, sometimes 25%. I'll let them go if they're lower priced. This is a $9, $10 stock. So it's going to be more volatile, but this is one that is probably playable if it goes inside on Monday. Let's see. MYGN turned up a couple days here on Friday, turned up. And then I'm sorry, on Thursday, and then Friday came through this little pivot on a pullback buy. So you could have added that on Friday. Looks pretty good. Another one that is pulling back here and was very powerful is this AMD. So this might be one that you might want to look to buy as it turns up from the pullback. And then I wouldn't give it too much room on the downside, because this really, if it's really under this kind of accumulation, and this is something that's a real trend ready to take place or ready to move forward, this should get some support fairly soon. DAC is one that I pointed out last week. Started turning up here, and then you came out on 8/18, of course, which was Wednesday. Still setting up in a base here. I know there's still some lingering earnings that could come out. GCO, one of the stock in the retail area. Goldman, we still have open. We're up about 3.5%, 4% on it. This is pulled back here, had a bunch of lower lows. If this starts to turn up, you could maybe try it if you don't already own it, and maybe set a stop at the low there. Let's see, IDYA. This is a little sloppy on the right side. I'm tongue tied today. Sorry. On the right side. So again, there's a bunch of names that have pulled back, like an LSCC, and are trying to hold up here. I know Rambus also pulled back. I just be careful here and don't get yourself where you're starting to get beaten up here and get stopped out too much. On the breakout side, let me just sort my screen here. I had a few names that broke out on Friday. Let me show you a few of them. One was this OPCH, which came out of this base, pretty big breakout, closed up 7.5%. KRA in the more cyclical chemical area. This came out about a week ago or so. I guess it was Friday. What's it, Friday, Thursday, when Mondays came out, and then pulled back, started to turn up. Again, pretty good sized base. I'm not showing you the full base here. If we look at the weekly, you can see bigger base here. Let's see what else. This RADI, RADI, if you will. Reversal recovery, a little bit sloppy though, on the thinner side. Of course, some of these are really thin names, or at least trading thin, but had a reversal recovery. The ZI wasn't up big on Friday, but came out here like a rocket. And now, maybe you get some type of pullback buy setup you can look for. And also this SE is another one that came out here. We went into earnings. If you remember, we were in it. We had a very tight stop, got knocked out of it. Also bought it over here, but made money that time. Since then, of course, it's wiggled a bit here and then moved out post earnings. Now, there have been a few that have had some trouble, and this is what I'm worried about. Stocks like this, where you come out of this little tight pivot and wham, look at this big outside day. This is the type of action that we've seen too much of. Something like LE, right? We look at Land's End. Try to turn up here. This is looking pretty good, right? A day pauses, wham, comes in here. This is not normal activity. This is not what we want to see from stocks that are moving up, breaking out, or moving up through pivot points. Look at this one. Was trying to sit up here. We're getting a low cheat off of a primary base. boom, this comes in real hard. Now, this is the type of risk that's in this market. You got to be careful. Then something like even like a FATE. This is one where I was sort of, going out on the curve there with one that maybe it was a lower RS, or it was big, big base with a deep correction, but needed to tighten up. Not only did it not tighten up, but you get hit on a gap where there's nothing you can do. Now you're underwater, right? So just be careful. This is a Kathy Wood stock that she's been buying and buying and buying. It just seems like, I don't know if she's just having, it's a tough market for her too, or if something wrong with the research. But we've seen name after name after name, these Kathy Wood names where she's buying them like crazy, and they go into earnings or something and just get clobbered. So I'm really suspicious of every area of the market at this point, because there's just no traction in any one area, and there's what I like to call air pockets. A lot of air pockets in the market where all of a sudden you think you're on stable ground, and it just opens up beneath you and sucks you up. So I'm ultra conservative here and favoring cash. This can certainly change like it just did, but unfortunately it's changing back and forth a little too fast for my liking. And I think you just have to be careful here. Let's watch, be very selective. If you're buying anything here, buy it from very low risk entry points, take the smallest risk you can. And unless things are working, do not step it up. Don't start chasing things and revenge trading and trying to get back quickly and ramping up your size and exposure if you're not doing well. That's the worst thing you can do. If this market all of a sudden starts correcting and that's what you're doing, you're going to end up underwater, and you're going to have yourself a big loss on your hands. So be careful. All right. So monitor the platform and for updates, and I'll also see you guys. We'll be talking on tomorrow in the training room for Q&A. All right. Bye-bye.